Something is very wrong with what you're seeing on your screen right now. The U.S. Navy just blew a hole in an Iranian ship. Iran fired drones at American warships in retaliation. There are no peace talks scheduled anywhere on the planet. The biggest oil supply disruption in world history just hit day 50, and silver is down, gold is down. That doesn't make sense, unless you understand exactly what is happening behind the scenes. And in the next few minutes, I'm going to show you, number by number, why today's price drop has nothing to do with silver or gold losing value. Let's get into it. Let me walk you through exactly what has happened in the last 72 hours, because the news is moving fast. The USS Spruance incident. President Trump posted on Truth Social confirming that the U.S. Navy guided missile destroyer USS Spruance intercepted an Iranian cargo ship called the Tosca in the Gulf of Oman. The U.S. Navy issued warnings for 6 hours straight. The Iranian crew ignored every single one, so the USS Spruance fired its main gun directly into the engine room, disabling the ship. U.S. Marines then flew in by helicopter from another warship, the USS Tripoli, and boarded the Tosca. The ship is now in full U.S. custody. This was not a drill. This was a U.S. military operation on an Iranian vessel in open water. Iran launched drone swarms at multiple U.S. Navy ships in the Sea of Oman. Iran's government publicly called the seizure of the Tosca piracy. And Iran is now officially pulled out of the planned second round of peace talks in Pakistan. Their statement called U.S. negotiating demands, and I'm quoting their own state media, childish. No peace talks, no date, no location. The BBC confirmed this morning that despite the White House calling negotiations ongoing and fruitful, neither side has confirmed any time or place for a next meeting. The ceasefire expires Tuesday, April 22nd. That's today. The ceasefire that the entire financial world was celebrating last week is now over, or within hours of ending. The UAE's energy minister confirmed publicly that 50 days of Strait of Hormuz disruption has blocked 600 million barrels of oil from reaching world markets. Reuters reported the financial loss at over $50 billion. The International Energy Agency has officially called this the largest oil supply disruption in recorded history, bigger than the 1970s oil crisis. Brent crude oil is up 6 to 7% today. Gulf News reported Brent at $96.30 and U.S. crude at $90.22 in early Asian trading. So let's do a quick check. War escalating. Peace talks collapsed. Oil at a historic crisis. Gold down, silver down. 3 weeks ago, when the ceasefire was being announced and everyone on TV was saying peace was coming, big hedge funds placed a very specific trade. They bet that oil prices would fall if they took large short positions on crude oil, meaning they would profit if oil went down. On Friday, April 17th, when that trade looked brilliant, oil dropped 10.84 in a single day, an 11% crash, one of its worst days in months. Those funds were celebrating. Then Sunday night happened. The Tosca was seized. Drones were launched Monday morning. The diplomatic talks fell apart. Oil reversed the entire Friday drop in less than 12 hours. Now those same funds are sitting on catastrophic losses on their oil bets. And when you lose big on a leveraged trade, your bank doesn't negotiate with you. They send a margin call. Immediately. You have hours, sometimes minutes, to come up with cash. So where do they get that cash? They sell whatever is winning. And what has been winning for months? Gold and silver. These funds have been holding gold and silver contracts that are sitting on big profits. So today, they are dumping those gold and silver paper contracts as fast as their computers can execute. Not because they think gold and silver are going lower, but because they have no choice. They need cash right now. This is called forced liquidation. It is completely different from someone deciding gold and silver are bad investments. It's a hedge fund fire sale triggered by a completely unrelated oil bet that blew up on a Sunday evening. Here's what the paper price on your screen does not reflect. COMEX registered silver, the silver that is actually stored in vaults and available for delivery, sits at 77.1 million ounces right now. That number has already fallen 31% since October 2025, when it was at 366 million ounces. None of that changed today. The drain didn't stop. The vaults didn't magically refill. Retail investors have been buying silver-backed ETFs like SLV for 169 consecutive trading sessions, the longest buying streak ever recorded for any major commodity ETF. In just the 30 days before that report, silver ETFs pulled in $921 million in fresh investment. Real people with real conviction, buying real silver-backed products. On gold, the World Gold Council expects central banks around the world to buy approximately 850 tons of gold in 2026. That's 23 consecutive months of central banks adding gold to their reserves. That buying didn't stop today because a hedge fund miscalculated a ceasefire trade. The physical fundamentals of this market did not change. A paper price flush does not put a single ounce back into the vaults. Today you will hear on financial news channels that gold and silver are falling because because the US dollar is stronger and interest rates are elevated. They'll point to the 10-year Treasury yield at around 4.26%. Let me be clear, those things are real. A stronger dollar does put some downward pressure on commodity prices. That's not a lie. But here's what they won't tell you. The dollar was already strong last week when silver was above $83. Rates were already at 4.26% when gold was near $4,179. Nothing about the dollar changed overnight. What changed overnight is that a U.S. destroyer disabled an Iranian ship and Iran launched drones at U.S. warships. The dollar story is a neat cover explanation. The margin call story is what's actually happening. And here's the simple test. Does a stronger dollar put silver back in the COMEX vaults? No. Does it reopen the Strait of Hormuz? No. Does it bring Iran back to the negotiating table? No. The physical world didn't change. Only the paper market did. Watch Tuesday's opening price. If silver opens above $80 and holds for the first hour of New York trading, the forced selling is ending and real buyers are coming back in. That's your green flag. If silver opens below $78, the selling has a second day in it. In that case, the $75, $76 range is the next key level to watch. Watch the $40 and $800 level Tuesday morning. If gold holds above $40,800 through the New York session, the institutional gold buyers absorb this flush cleanly. A close below $4,150 means the selling continues another day. Watch COMEX registered silver inventory every morning this week. If it falls below 75 million ounces while the paper price is also being pushed down, you are watching the classic setup that comes before a physical squeeze, where paper supply and physical supply are both draining at the same time. That is COMEX first notice day, just 10 days away. Anyone holding paper silver futures contracts who wants actual physical delivery will need to declare that soon. With vaults already drained 31%, this is a date worth watching very closely. If you hold physical silver or gold, you hold real metal. The price flashing on your screen is the price at which hedge funds are dumping futures contracts to cover an oil bet that went wrong. That price has no connection to what your metal is actually worth or what it costs to replace it. Physical dealers are not lowering premiums to match the paper sell-off. Some are actually widening them because they understand exactly what this is. If you hold PSLV, Sprott Physical Silver, you hold units backed by real audited silver sitting at the Royal Canadian Mint. The Mint didn't lose any silver today. When this paper flush ends, and margin calls always resolve within 24 to 72 hours, PSLV's price will reflect the real physical price again. If you hold SLV or SIVR, watch two numbers: the daily COMEX vault inventory and the April 30th first notice deadline. If the vault number drops below 75 million while prices are being suppressed, that is one of the most significant divergence signals in this entire market cycle. If you hold GLD or FIWIS, gold ETFs, GLD is doing exactly what it's designed to do, tracking the paper gold price through all the volatility. The structural case underneath it, 20 to 23 consecutive months of central bank buying, 850 tons expected in 2026, did not change today. For FIWIS holders, today's paper flush is pushing FIWIS below its real physical value, which for long-term holders in the right account structure can actually be a rare and clean entry point. If you hold GDX or GDXJ, mining stocks, miners are getting hit twice, the gold price is down and stocks broadly are selling off too. The operating leverage that made miners perform well throughout this Iran conflict cycle hasn't disappeared. It just got cheaper to access. But these are higher risk positions, and this is not the time for reactive decisions. If you hold AGQ, 2x leveraged silver, today is maximum discipline time. A 3 to 4% move in silver becomes 6 to 8% in AGQ. If you don't have a written plan for your position before today's close, that needs to be your first priority. Let me leave you with the full picture in plain language. The U.S. Navy boarded an Iranian ship. Iran fired drones at American warships. Peace talks are officially off. The Strait of Hormuz has been blocked for 50 days. 600 million barrels of oil are being held out of world markets. The ceasefire expires today. COMEX silver vaults have already lost 31% of their supply since last October. First notice day is 10 days away. None of that changed today because a hedge fund bet wrong on a ceasefire. The funds selling gold and silver right now are not doing it because they believe these metals are worth less. They are doing it because a margin call is not a question. It is a demand. Forced selling and choosing to sell are two completely different things. Understanding that difference is what separates the investors who come out of this cycle with more than they started with, from the ones who sold at exactly the wrong moment. Drop your live price in the comments right now so everyone watching this video can see where silver and gold are actually trading in real time. Tell me in the comments what you want me to cover next. Your questions drive tomorrow's video. The ship is seized. The drones are in the air. The vaults are at 77.1 million ounces. First notice day is in 10 days. This is John, I'll be back tomorrow morning with the vault number, Tuesday's price read, and the next chapter of this story. Stay patient, stay positioned. See you tomorrow.